Should I get a mortgage now in 2020 in light of the coronavirus epidemic and lower rates in general, as well as the market pandemonium? Well, rates certainly are lower, and the 10-year and 30-year treasuries have recently hit all-time lows. And of course, keep in mind that the mortgage rates are typically based or referenced, at least in some part, off of the 10-year treasury note. This is an interesting question because Google searches have hit an all-time high for mortgage and should I buy a home in recent weeks. We'll demystify this topic in the following video. My name is Chris at HouseIt. HouseIt is the largest assisted for sale by owner and buyer agent commission rebate company in New York City, established 2014. The first consideration before going out and getting pre-approved and having a bank run your credit is to actually get a few quotes from major lenders in your area and see if they've actually lowered rates along with broader market interest rates. Even though the 10-year treasury has gone down significantly to all-time lows in recent weeks, banks surprisingly have not kept up. We've interviewed a few major lenders headquartered in New York City that are national or rather global in nature, and they've mostly told us that their rates have held steady and not gone down despite recent market plunges in the stock markets as well as all-time lows in interest rates. For example, a major New York-based financial institution told us that their rates have held steady from approximately a week or two before at 3.5% for a jumbo 30-year fixed-rate mortgage for a refinance and 3% for a 30-year fixed-rate jumbo loan for a new acquisition. Keep in mind that mortgage interest rates will always necessarily be higher than the risk-free rate, which in this case would be the appropriate treasury bond of the same maturity. Of course, you can be patient, as at some point banks may simply need to reduce their mortgage rates to keep up with competition, but it seems at the moment that many major banks are holding steady until the turmoil dies down a bit. So to answer the question, in short, check rates with multiple lenders and see if rates have actually gone down in response to the market turmoil. Another interesting question we get is from homeowners who have paid down most of their mortgage and are considering a cash out refinancing to take advantage of both lower rates as well as lower broader market equity indices. Many homeowners are thinking about tapping their home equity to purchase stocks for the long run. Is this a good idea? Well, first of all, please consult your financial advisor. We do not offer financial advice, but just from a real estate professional's perspective, we ask you to consider a few things. One of the pros of getting a cash out refinance is the fact that the leverage is very unique. It is non-mark-to-market, which means that unlike a stock portfolio margin loan, the lender does not quote-unquote mark-to-market your holdings every day and potentially ask for a margin call if the value of your portfolio has declined. This can be extremely risky in a declining market, but by borrowing through a mortgage, you won't have the risk of mark-to-market checks at all, and you will have the financing for term without any checks on the underlying asset value. This can certainly help you sleep at night. Another unique factor about mortgage leverage is the fact that it is very long term. For example, the most common tenor for a mortgage is 30 years. This is almost unheard of in any other avenue of lending. Lastly, mortgage debt is typically non-recourse, and you can certainly make it non-recourse by purchasing a property or owning a property in an LLC. This means that if you default on the debt, the lender typically only has recourse, meaning they can only go after the asset or the home, not your other personal assets. Again, this certainly is the case if the property is in an LLC. So should you go out and tap your home equity and buy the stock market? Again, this is something that you should consult with your financial advisor, but from a real estate professional's perspective, we ask you to keep a few things in mind. One, there are refinancing fees. Please check out our recent article on should I refinance my home, and our related video to learn more about how much it costs to refinance a home. For example, on a $700,000 mortgage, you might expect total fees of approximately 1%. Now, let's jump back to buyers of actual property. Should you get a mortgage to take advantage of buying a home for the first time? Well, if rates do go down in the mortgage world and you are able to take advantage of it, that is fantastic. But you do have to keep in mind actual market conditions in the real estate market wherever you are. For example, oftentimes in a declining real estate market, sellers would typically not sell, and you will see the number of transactions decline precipitously. However, the New York City market is unique in having been in a buyer's market for several years now, so time will tell, but we may see this recent blip in broader markets cause a cascade effect and cause sellers who have been holding out to finally give room and lower their prices. Our takeaway is this: don't let volatility and big swings in broader markets frazzle you when it comes to your home buying decision or your refinancing decision. Make these decisions as if the market has not changed. You should not decide to buy or refi simply because of incremental changes in mortgage rates. You should always evaluate and make the decision based on your personal circumstances. For example, much more important is your lease actually coming up? Do you plan on staying in the city for at least 2, 3, or 5 years? You should again check out our article on buy versus rent to see if it makes sense to buy versus continuing to rent. Usually the math boils down to how many years you plan to stay in the city. Again, consider your personal decisions and don't get frazzled by what's going on out there. Anyway, we hope you found this video helpful. If you did, please hit like or subscribe. We do come out with content on a regular basis. Please feel free to leave a comment below if you have any questions. And of course, if you are interested in buying and selling a property and you want to learn more about how you can save on closing costs, please check us out, www.houseit.com. Thank you, and we'll see you on the next one.